Welcome to another episode of Making Money Trading Forex from the Jungle. It's your boy Point FS, and today we're going to be talking about trades we took on GBPCAD, the two setups. We're going to be talking about the entries, the management, and the exit, especially our thought processes during the trade. Now, these trade setups are based on ICT concepts and demand and supply, specifically order block, inducement, and rally-based rally, drop-based drop, and other demand and supply zones. So stick around as we're going to dive deep into the video. See you there. So this GBP Canadian dollars. So the first thing we'll do is refine your chart. We'll refine our chart and make the candles appear the way we want them to appear. All right. So I can refine my charts by putting it this way. Then after the refinement, we'll now go and do our top-down analysis. Now we are swing traders and we catch only the swings in the markets. So we do our top-down analysis. Our higher time frame is going to be on H4. Then followed by H1, and we now look for entries in M15, that is 15 minutes time frame. So let's switch to 4 hours time frame. So this is our 4 hours time frame. What are we looking for in higher time frame? What we are looking for is to find the order flow, or also called the trend. All right, so we look to find out where the trend of the market is in this higher time frame. And as you can see, you can clearly identify a break of structure this place. All right, we have a break of structure like this. So this is a break in market structure, and this is another break in market structure. All right, now we know that whenever we encounter a market breaking structures up, then that market is in uptrend. Now, typically, we know that this market is in an uptrend in 4 hours time frame. So, having identified the order flow in higher time frame, we switch down to a lower time frame, which is 1 hour. As I said, we are going to go from 4 hours, 1 hour down to 15 minutes. All right. So, let's switch down to 1 hour. So, this is 1 hour time frame. And as you can see, the last break of structure we had is this place. Right, this particular line is our last break of structure. So we are going to be looking for buying setups in this particular zone. So what we did was to find a decision point within these zones that can lead us to buy. All right, so we explored the demand and supply, we explored ICT, we explored every other possible things to find setups. So I'm going to show you the two setups we took last week using this particular concept. Now we have identified the trend. We are looking for a trading zone where we can buy in this setup, because we are an uptrend. We can only look forward to buying. So let's dive down to 15 minutes time frame. Now this is our 15 minutes time frame. If you can recall vividly, this particular line is that our break of structure in higher time frame, signaling that the trend is up. So what we have to do is to be looking for an opportunity to start buying the markets. So we came that day and we saw this setup where market created this tiny break of structure, created another break of structure. All right. So when we discovered this break of structure, what we did was to come and mark the demand zone of this break of structure, which is this particular zone. Now also the order block. All right. So we have something like this. This was what we did. So we're actually waiting for when market is going to come back to this zone so that we can enter buy and target our profit at the nearest liquidity high, which is this zone. All right. So what we literally did in the first setup was to come and put our entry this place. Immediately market broke this structure, we came here and put our entry this way. You can see it's a sharp sniper entry. We did something like this. This is 15 pips. We always put 2 pips below the swing low. So 15 plus 2 is 17. So we have 17 pips. All right. We have 17 pips and our TP is here. All right. So, and as you can see, markets came. Now, as you can see, market came and took us in. All right, as it took us in, it rallied to our TP zone, which is the nearest high or the liquidity sweep zone. So you can agree with me that this market created a break of structure in the direction of our order flow or our trend. We waited for market to return to this order block zone. All right, then we now placed our buy and it took us all in and hit our TP. Now this setup was a risk per return of 2.5, meaning we risk 1 to make 2.5 R. So this was when our TP was hit with this high impulse move, and that was how we made this 1:2.5 risk per return ratio in first setup. Now for the second setup, after market broke this structure here, we observe that market is going to return to the decision point that created this break of market structure. So we are waiting for a market to come to this zone, all right, to see possibly market reaction and enter the setup here. Now after creating these other blocks, now there is another thing that happened below here, which is the drop base rally. If you are familiar with demand and supply, now in drop base rally is a demand zone. So when we observe this particular order block zone, we spotted this particular zone as well. So because of that, we had to give room for that, because oftentimes when we see this kind of setup, this first order block is always going to serve as an inducement before the main move starts in the market. Considering the presence of these two decision points, the first one always serves as an inducement. So if you don't know what inducement means, you can Google it or you can type on the comment section and I will make a video on that. So because of that, we'll always choose to trade the drop based rally. All right, so because of that, we have to initiate our entries below here. So we have to take out this particular first decision point. Now there are pros and cons to this. There are possible scenarios that markets will come and peak at this particular first demand zone and it will not return again, but oftentimes it's always going to serve as an inducement and pick people in the second zone. So that's why we have to focus on the second zone and make up our mind that if market doesn't go back to that second zone, we are good to miss the opportunity in that market, because tomorrow is always another day to trade. So what we did was to come and place a buy limit at this particular zone. All right, and as usual, our stop loss will always be 2 pips below the swing low of this particular demand zone. So we have 12 pips stop loss. So that was our entry, and our target profit is going to be the nearest swing high because of the concept of liquidity. We don't want to be exposed and left our profit to come back, understand. So we don't really care of what the market does after taking out the liquidity. We need to take our profits at the liquidity zones. All right, because remember, if you can't see the liquidity, then you are the liquidity. So what we had to do was to place our entry here and our targets at that place. So the market delayed and we were keeping watch in the market to see if we will get triggered. Unfortunately, it was triggered around this zone. All right, and after triggering, you can see how the market surged up to hit our TP. All right, and this one gave us a risk per return of 4.94. Then it was approximately 4.9. all right, so these are the two great trades we took on GBPCAD this week. So as I recap earlier on, the first trade was based on purely demand zone or order block zone. You can see it there, and he even gave multiple entries. All right, he gave multiple entries. Should you have missed this particular setup, he gave multiple entry: break structure, return again, break structure, return again. All right, then before the market started surging up. So even if you missed the initial one, you could have still made money by waiting for the retracement and entering that. So, and the first setup gave us 2.5, while the second setup gave us a risk per return of 4.9 risk per return ratio. All right, so these are the two setups we traded. So this thing is all about developing a system and following it. And once you have a system, it doesn't matter wherever you are. You can be in a city, you can be in a village, you can be in the bush, you can be in the jungle. As far as you have your internet connection and your digital device, you are good to go. If you want me to analyze a current market and show you my objectives in that particular market, you can choose any market of your choice, provided it's major currency pairs, and I'll give you my overall outlook and what I'm watching out for in that pair this week. Just drop it in the comment section and I'll attend to that. So if you like the content of what you just watched, please click on the like button and subscribe to this channel and click on the notification bell so that you'll always be notified whenever we drop a new information. Also, remember to recommend and share these videos to your friends. We can all succeed together and we can all be financially free. Point FX is out to help traders succeed.